This segment is sponsored by New Perspective Financial Solutions. When it comes to federal government employees, what do they need to be aware of in terms of planning for retirement? Here to help us out is Tavon Jackson. Tavon is the founder of New Perspective Financial Solutions, a DC-based firm that focuses on preparing people for a successful retirement. Good to see you.
Thanks for having me.
All right, let's talk about minimum retirement age. What
Sure.
should retirees understand about retiring early?
You know, some people don't like their job, so they want to call it quits as soon as possible.
Right.
So 57 with the federal government is your minimum retirement age. The challenge, though, of retiring early is that, one, your pension is smaller, but then you might not have access to a lot of your retirement accounts. Because if you have an IRA or a Roth IRA, you can't touch those till you're 59 and a half. So if you're considering retiring early, just know that you're going to get your government pension, but also what's called a Social Security supplement. And then when you turn 62, that supplement just goes away, and you have to make very important choices after that, or you're not going to be able to retire comfortably.
So those that get Social Security, do they have to pay taxes on that?
So people don't realize this, but Social Security is 100% tax-free.
Okay.
You pay no taxes on your Social Security, but what causes it to become taxable is all your other stuff. So if you retire and you only get Social Security, there's no taxes at all. But if you have a pension coming in, rental income, dividends, that's what makes your Social Security taxable. But we have a strategy where we help our clients pay the taxes on their money now, so that by the time they retire, they're in the lowest tax bracket and their Social Security will be 100% tax-free.
Right, especially who knows what it's going to be like in the future,
Yeah,
right?
yeah,
I'm listening to you. All right, in the TSP, there's a lot of options. So how do you keep it simple when you're picking your funds?
So it's hard to choose, like, what percentage should I have in the G versus the C,
Right.
S, and I. It can get confusing. So there are some funds called life cycle funds, and they have a date to it. So it might be the 2030 fund, the 2040 fund, the 2050 fund, and the further out it is, the more aggressive it is. So if you're retiring in the next, let's say, 5 years, you may look at the 2030 fund because you don't want to take a whole lot of risk in your portfolio, because what's the worst thing that can happen? You retire, then the market crashes, then you got to go back to work.
Right.
So by having the life cycle funds, it makes it very simple to pick the funds for you.
Okay, you help us figure out what's going to be
Absolutely.
best, of course. For those that are planning to retire soon, you talked about things they need to think about, but what are some of the biggest mistakes that you see?
Well, the biggest mistakes is that once you get that Social Security supplement, so remember, you retired early, you're getting your pension, and you're getting that Social Security supplement. Once it goes away at 62, you're short $2,000 a month. And what a lot of people do is they go back and get their real Social Security, but then what happens is it's a 30% reduction, and there's also a cap on how much money you can make. So if I retire, I may not stay retired. I may continue to go back to work or start my own business. But if you take your Social Security at 62, you only can make $22,000 a year from another job. So there's a lot of restrictions. And then the other concern is that once you retire, a lot of people leave their TSP there versus rolling it over into an IRA. And there's a lot of tax advantages of having an IRA versus leaving it where it is.
When you retire as a government worker, does your life insurance go away?
It could. So usually when you're working, most people have like 3 to 5 times their salary. So if I'm making $100,000, I might have $500,000 for my family. What happens though is when you retire, those costs go up a lot. And every 5 years, the premium to pay for that insurance doubles. So most people keep the free insurance once they retire.
Right.
But what happens is every month it goes down 2%. And then after 50 months, it's only enough to bury you. So if you're considering life insurance, you want to get a private one outside of the government because the costs are cheaper. And then if you change jobs, it never changes. It's the same amount every single month, so you have that stability there.
I like that. All right, Tavon, thank you. Great information as always for you at home. If you'd like to learn more about preparing for your retirement, New Perspective Financial Solutions has a great offer. Tavon wants to help protect and continue to grow your money while also helping you create a reliable income stream. So right now, for the first 5 callers with a portfolio of $500,000 or greater, they're offering a complimentary portfolio X-ray and retirement income plan just for you. This will allow the team at New Perspective Financial Solutions to sit down with you personally or schedule a call to make sure you are on the right track for a successful retirement. That number to dial is 240-335-8366. Again, that's 240-335-8366.